show them music. Show them music. You know it's right now. Yeah.
Chapter beats, in the eardrums.
Fine ladies, you they make we they go crazy. Fine ladies, we know say you got it. Fine ladies, you they make we they go crazy. Fine ladies, we know say you got it. See them a bumper to bumper. Fine boys are cocky walk on now. Watch you straight from the corner. How some girls be the conquer. Show them the conquer. Show them the wine, them a bumper. Them scatter the corner. Yeah, them scatter the corner. Oh, na na na. Mama woman she back back. What do you get? Oh, feel like no cocaine, no cocaine. What do you? Mama woman she back back. What do you? Feel like on the.
All right, thank you all for tuning in to WJC 98.3 FM. Your voice and music, your station. My name is Jeff Badu, and I'm a licensed certified public accountant. I'm a serial entrepreneur and a wealth multiplier, and the founder and CEO of Badu Enterprises, LLC, which is a multinational conglomerate in the finance industry. We provide a suite of financial services, including tax preparation, financial consulting, property tax appeals, credit repair, and services of that nature. So today we'll be going through some tax season tips. It is tax season, so happy tax season to everybody. It actually officially kicks off next Monday. However, we'll be essentially it's really started in the tax professionals world. Happy MLK Day for those that are celebrating today. But today we'll be going through some tax season tips. And today, unfortunately, we do not have a market report since today is technically a holiday. But we still decided to do the show just to keep it consistent, keep the content flowing and everything of that sort. So yeah, we'll be going through some tax season tips. Feel free to post your questions in the Facebook Live. You can call into the studio 773-942-7167 773-942-7167. Thanks to everyone that's tuned in. We have we have Ashley, we have Tifa, we have Nicole. Looks like we have quite a few people listening today. So we're just going through some tax tips. We'll start really with individuals, and then we'll go into the business owners. So individuals, we'll just keep it short. But a few things you need to keep in mind when you're filing your taxes is, first and foremost, you need to find somebody that has integrity. Somebody who you can trust, somebody who's doing good work, and not somebody who's just going to get you a big refund. Because in reality, a tax refund is nothing more than your own money. It's simply money that you overpaid to the IRS or to the government, and they're simply refunding you back that money. Unless you fall into one of the three categories: the earned income credit, the child tax credit, or the American Opportunity credit. So definitely make sure you find somebody who has integrity and somebody who's out in it for your best interest. Now, one thing we do for our clients is we heavily educate our clients. So we send out newsletters. We have workshops. I'm doing 3 workshops next week. If you need more information on that, please feel free to email me at jb@badutaxservices.com, and I'll send you all the details. But we're doing 3 workshops next week, and the following week we'll probably do another 3. Of course, you have my radio show here, which you can always tune in. We're live, WGAT 98.3 FM, your voice, your music, your station. This is Money Talks. So you can always catch this show live from 7 to 8 p.m. Central Time every Monday night. It's also streamed live on Facebook. So we're live on Facebook. You can feel free to post your questions, anything of that nature. And then also we are, this also gets posted to my podcast, the Money Talks Badu Edition podcast. You can find it on Spotify, iTunes, SiriusXM. I mean, all the major platforms out there when it comes to podcasts. So we provide a lot of education. So I would challenge you to find somebody who's not just doing your taxes, but actually giving you these extra benefits that come along with the taxes. So just those are just a few tips. Of course, don't go out there claiming other people's kids, because you can get into some serious trouble with the IRS. Just do things the right way. Stop focusing so much on the tax refund. That's not the mindset you should have. Your mindset should really be about how can I maximize this money throughout the year instead of relying on a tax refund at the end of the year. It's always nice to receive a lump sum check, but a tax refund is nothing more than an interest-free loan to the government. That's all it is. So just wanted to point that out. So that's all we'll really talk about when it comes to the individuals. Now let's talk about the business owners, and let's just give you some tips. So tax season can be very frustrating for business owners. I mean, it can be extremely frustrating as a business owner. But there's always help. You don't have to go it alone. Never go it alone. You always have help. You have people that can look out for you, such as myself. So essentially, me personally, I do my taxes every single year, and my tax return is a very long process. It's probably over 100 pages, because I have a lot of things going on. I run 11 companies. I'm on not-for-profit boards, donate money, own a house, things of that. There's so many components of that, and when you add, let's say, in the future, if you're adding a wife, you're adding kids, you're adding all these things, it can make things very complicated. So as a business owner, you really have no business doing your own taxes, in my opinion. That's my first lesson of the day, is if you're a business owner running a sole proprietorship, S corporation, C corporation, partnership business, you have no business doing your own taxes, especially if you're not an expert in this subject or in this area, because it's very important. I always tell people, just like my plumber fixes my toilet, your tax preparer should be the one helping you with your taxes, or your tax advisor. And it's very important. I can't stress this enough. It's very important to stay compliant with tax laws and regulations. Always take advantage of the gray areas. And there are tons of gray areas in the tax code. But do not bend the rules. Do not overstep boundaries. Just don't do those things, because they can get you into some really, really serious trouble. So that's really my advice, is to really, really be careful, be cautious when it comes to taxes. You don't want to rob the government. Pay your fair share. However, your fair share can be reduced through strategic tax planning, which is our core service in the firm today. Now let's talk about the process. If you're a business owner, you're just getting started, you don't have a clue about taxes, it's tax season 2020, it's time to start fresh. You don't have a single clue when it comes to taxes, let's just say, hypothetically. Ultimately, here are some steps you can take in order to set yourself apart or set yourself up for success. First thing is organization. You must be organized if you want to be a successful business owner. This is the most important step of the tax preparation process. You need to have everything nicely organized. Excel, whether you use an Excel spreadsheet, QuickBooks, and we'll talk about that in a second. But keep your receipts organized in a file, somewhere it's easily retrievable and you can easily find it. And just try to keep all your records neat and nicely organized. And keeping receipts is a good habit. But right now we're in and when I say receipts, I mean physical receipts. It's a good habit. We're now in the digital age. Virtually everything is online. It's cloud-based. What you can do is, all you have to do is take a picture of the receipt and create an album on your phone called 2020 Receipts or 2019 Receipts, and just drop, every time you get a receipt, take a picture and just drop that picture into the 2020 Receipts folder. It's really, really simple. That's all you really have to do when it comes to receipts. You don't have to do anything else. As long as you have a copy of it, you're perfectly fine. You're basically audit proof. So this is a practice, and anything that I'm telling you is something I usually do. So me personally, I'm a business owner, so I'm only going to tell you things that I personally do that are in your best interest. So virtually everything is online. Avoid using cash. Cash is king, but not when it comes to tracking. Very hard to track, and it's very hard to prove cash unless you do have a receipt. So try to stay away from cash. Try to use a debit card or credit card when it comes to business expenses, or when you're receiving cash. Cash-only business is not the way to go. It's very, very hard to track cash. Excel files are a great method. But you might want to consider using something like QuickBooks, which provides you automation. We'll talk about that in a second. Excel is nice because you can edit it at any time. You can create you can customize it however way you want. You can pretty much do whatever you want in Excel, as long as you have a profit and loss, an income at the top, and then you have all your expenses nicely broken out into categories. Income minus expenses equals net profit, and that's essentially your taxable. That essentially ends up becoming your taxable income in a way. So Excel is great. I mean, me personally, I use QuickBooks, and then I export everything into Excel, and I make some minor adjustments, reconciliations, things of that nature, and then that's my final end product is actually an Excel spreadsheet, but it comes from QuickBooks. QuickBooks essentially can export as an Excel file, and then you just make manual updates. I reconcile my books at the beginning of every year for the prior year. So at the beginning, I did mine this year, January 1st, believe it or not. Not that I was bored or I didn't have anything else to do, but that's just the way that I planned it. It wasn't really a whole lot going on that day, so I just decided to do the books. Still celebrated the 31st, of course, and all that good stuff. But New Year, chance to start fresh. I wanted to see how the company did financially. We had our best year financially. The only way I knew that was because I kept track of it. Best year financially for the company, all the companies across the board in enterprise. So tracking is very important. You can only know where you are if you're able to track something. You cannot do this. You cannot run a business if you don't track this stuff. And remember, if you don't have a business, you usually have a hobby. So just something to keep in mind there. Now let's talk about QuickBooks. QuickBooks is an accounting software that will automate your life. Essentially what you do is you buy the subscription, and it's starting off at about $7 a month. It's really, really cheap for a business owner. You link your business bank account. That's the first thing you do when you get a QuickBooks account, is you link your business bank account. And essentially what it does is it auto-populates all your transactions from the account, and you're just clicking. You just click. For me, it takes about maybe 30 minutes to an hour once a week. Sometimes shorter, sometimes 15 minutes. Once a week, I go on my QuickBooks, click, and I'm done. Just clicks and transactions, what it was for, the category it was for, what it was business. We don't do any personal transactions really anymore. So you can link your business bank account. When you open a business, please make sure you have a business bank account. You link it to your QuickBooks, and then all of a sudden it gets connected, or it becomes a part of your books. And then, so QuickBooks syncs all of your transactions. It takes some time to get organized. Remember, as with anything in life, it's going to take time. You need to get the hang of it, and then you'll eventually get better at it. So get used to the software early, and just use it, and it's going to become very easy and automated. We do offer QuickBooks training, so highly recommend you sign up for a training. You can sign up at badutaxservices.com. Because QuickBooks, you do need some type of training, maybe a 30-minute to an hour training, just to really, really get acclimated with the software. But reporting will be very easy afterwards. I mean, it's a very easy exercise as long as you understand the process from the beginning. Another thing about QuickBooks is it automatically tracks your miles for you. So you basically download the mobile app for this. You turn on the auto mileage tracker and set it forget, boom. The mileage are being tracked every week or every month, however way you do it. You swipe left, swipe right, like Tinder, and then basically your miles get marked as business, or they get marked as personal. And then another thing with QuickBooks, it's very reasonable from a cost standpoint. It doesn't really cost you that much to get QuickBooks. It starts off at about $7 a month if you have a certified QuickBooks Pro advisor, or somebody who has a QuickBooks accountant account, like myself. You can actually get a discount. You get a steep discount on your QuickBooks subscription. So now that you've gotten organized, ultimately what you need is a profit and loss statement. And some businesses need a balance sheet, but I wouldn't worry about that too much. Balance sheet is simply really how much money did you have in a bank account at the end of the prior year. That's usually that's the main number we care about. How much cash was in a bank account at the beginning of the prior year, or at the end of the prior year. Then the next step is to file the taxes. This is where you consult with the tax professional, or you do it yourself, God forbid. But essentially, first thing you need to know is you need to know the type of entity you are. This is where a lot of business owners make a mistake and they go wrong. They don't know what type of entity they are. So it's either you're a pass-through entity or a non-pass-through entity. Pass-through means that the business transactions or the business profit, the profit of the business, will ultimately end up on your personal tax return. So if you file a partnership tax return and there's multiple people known as partners, the business return gets filed, but then all the income and expenses gets divided up among the partners, and then the partners pay the taxes on their personal tax return. A lot of people get confused with this. They're like, well, didn't I create the business to separate myself from a tax standpoint? And I say, no, you separate yourself from a legal standpoint, but not a tax standpoint. If you're a pass-through entity, you still have a separate business tax return unless you're a sole proprietorship or an LLC tax as a sole proprietorship. But at the same time, you're still a pass-through entity. You're seen as one, basically, from a tax standpoint. That's what's called pass-through. The business income and expenses passes through to your personal tax return. This is also called a flow-through entity. So just fancy terminology here, nothing too big to worry about. Now, pass-through does include sole proprietorship. So if you are doing a DBA, or if you're doing business in your personal name, God forbid, you should never do business in your own personal name. You should always have an entity in place, such as an LLC, limited liability company, or a corporation. Those are really the only two types of entity structures, LLC and corporations. From a legal standpoint, those are really the only two choices when it comes to entities. Or a single member LLC, that's taxed as a sole proprietorship, so that's also passed through. You don't have a separate business return for this one like you do with partnerships and S corporations. But as a sole proprietorship or an LLC tax, a single member LLC tax as a sole proprietorship, you are still passed through. You just don't have a separate business return. Also, partnerships or multi-member LLCs tax as partnerships, and an S corporation all have passed through taxation. Sole proprietors file Schedule C, which gets attached to their 1040. So it's a schedule, just like your Schedule A, itemized deductions. This is your Schedule C for your business profit and loss or income and expense. That gets attached to your 1040 or your individual 1040. Then partnerships or LLCs, taxes, partnerships, file what's called a 1065 partnership tax return. And then K1, so the 1065 turns into a Schedule K1 for each of the partners based off their ownership percentages or their share of profits and losses. And the K1s are sent to the partners so they can use that to file their personal tax return. And an S corporation files an 1120S, as for small or small business or subchapter. And K1s are sent to the shareholders, similar to K1s from partnerships being sent to partners. The only difference between a partnership and an S corporation is, from a tax standpoint, partnerships still have to pay self-employment tax. S corporations don't. The owners of a partnership are called partners. The owners of an S corporation are called shareholders. That's really the only two differences. The only non-pass-through entity, the worst type of entity, in my opinion, to have if you're not a big, large business or a public company, is a C corporation. And C corps file 1120. There's no pass-through here, so it does not go as a schedule on your personal tax return, but it's simply it's a completely separate. So the business essentially remains separate. So there's no flow-through, pass-through to your personal return here. Now, you can do this all by yourself. I always tell my clients or prospects, hey, you're welcome to do whatever you want. It's your life. It's your business. You can do whatever. However, if you want to truly be successful, and believe me, I use professionals for pretty much everything unless I'm an expert in the area, such as keeping my own books or doing my own taxes. But please, my second advice really of the day is to use a tax preparer. If I haven't emphasized this enough, is to make sure you're using a tax preparer, one who has integrity, who has your best interest in mind, who can relate to you, who's intelligent, who's willing to work with you, and who can play by the book but also knows how to take advantage of gray areas. So highly recommend you seek the help of a tax preparer, because in my opinion, or as it should be, the tax preparer should only be able to help you. So that's advice when it comes there. Now, always keep in mind deadlines. Very important that you keep deadlines in mind. This can really, really hurt you if you don't. But partnership, extremely important. I had a client who came to me in April who had an S corporation and said, hey, basically they didn't know that they were going to get hit with a penalty. So partnership and S corp returns are due March 15th, not April 15th, March 15th. So if you have a partnership, a 1065, or an S corporation, 1120S, you must file by March 15th. Sole proprietorships and C corporations are due on April 15th. So if you're a sole prop, or if you run a C corporation, a non-pass-through entity, you're due on April 15th. Your personal return is still due April 15th, no matter what. And if you're a nonprofit, it's usually due May 15th. So very important to have those numbers in mind. The penalties are around $200 per person or per partner, per owner of the business per month. If you don't file, I had a client who got hit with a $15,000 penalty because they did not file on time. It's extremely critical that you file these taxes on time. So just something to note there. And then utilize tax planning strategies. So if you're a C corporation and you're a small business, you might benefit from becoming an S corporation. If you're a sole proprietorship, you might benefit. Let me tell you a secret. The way we make most of our money in our firm today is using tax planning strategies. Schedule C to C Corp, or Schedule C to S Corp, C Corp to S Corp. We do that all day, every day. We just did that with a client this morning. Out the blue, called us and said, hey, I'm looking to do my taxes. Next thing you know, they're on a tax planning plan that's going to save them about $10,000 for 2019. Can you imagine? We're going back in time. We're not even progressively doing it, or we are, but we're also helping this client in the past. So definitely, that client was very happy. He was like, when he picked up the phone at first, he was a little. I think somebody made him mad, so he sounded a little, just a little uncomfortable or some sort, a little grumpy. But then when I told him I could save him $10,000 by converting him to the right entity, and he was like, "Oh yeah, how's your day going?" I mean, the conversation changed. When you can save somebody $10,000 in 1 year, the whole conversation basically changes. Money that can be used for retirement. Money that can be used to fund your kids' college education, money that can be used for reinvesting back into the business. So that's what we primarily do, is we find tax savings for our clients. Our firm's mission is to maximize your financial security. Part of that is to help you capture these tax savings, and that's why you need a solid tax professional on your side, because doing this whole thing by yourself is not it might cost you less, but it will cost you more in the long run because you're losing money. And then when we talk about businesses, there are plenty of write-offs. Plenty. I won't get too in-depth into this. Plenty of write-offs. So another part of filing the taxes goes back to the organization of QuickBooks, is to know your write-offs. Medical insurance premiums are fully tax deductible as a business owner. Automobile, so if you drive back and forth to client sites and all that good stuff, that's tax deductible as a business owner. Retirement contributions, I recommend you do after-tax contributions to retirement, so utilizing Roth vehicles or after-tax. You have payroll deduction IRA plans, simplified employee pension plans or SEP plans, simple IRA, simple 401k, individual or solo 401k, simple or SEP, simplified employee pension plans very easy to establish. You can have employees, and then you can contribute over $50,000 per year towards the plan, which is limited at 25% of your net profit. So whichever is the greater of the two numbers. You have the simple IRA, which is simple. The reason why they call it simple is because they're simple. Then you have the simple 401k plan. You have the individual or solo 401k plan. You can contribute very similar to the SEP. I like solo 401ks for one-man shops. It's really only good for one-man shops or if you have a spouse that's in the business. You can claim tax deductions based off this. And so you cannot have an employee, you cannot have an employee outside your family or your spouse when it comes to the individual or solo 401k plan. Then you have the key-off plan, which is a qualified retirement plan established by self-employed individual partnership. So many options. I mean, as a business owner, you have so many options to save for retirement. One of the first things I do every year is max out my retirement accounts, which thankfully has been already done this year. All retirement accounts have already been maxed out for the year. That's one of my New Year's quote-unquote resolutions, or however way you want to picture it, is to max out all retirement accounts in full. That way I can focus on investing in other things. So it's one of the good things to do is to get those things maxed out. Roth IRA, maxed out at $6,000 a year. Health savings account or HSA, maxed it out at $3,500 a year. Solo 401k up to 50,000 plus a year, with a max of 25% of your net profit. And remember, for one of the reasons why I encourage people to get married is because your tax benefits double. So if you're married now, your IRA becomes $12,000. The Roth IRA becomes $12,000 because now it's the two of you, or hopefully just the two of you. And then your solo 401k can be up to over $100,000. Your HSA or health savings account now becomes $7,000. So these things double as you become married and as you step into the marriage life or the marriage world. And one thing to note, as a business owner, you are heavily favored in the tax code. The tax code really benefits those who create jobs or create housing. So if you're a business owner, the tax code was created for you. And if you're a real estate investor, the tax code was definitely created for you, especially with the new tax reform that was passed in 2017, the Tax Cuts and Jobs Act. So plenty of write-offs. I won't get into the details. Travel, meals, utilities, advertising. There's so many write-offs for business owners. Your whole life becomes a write-off. Everything you do becomes tax deductible when you are a business owner. So it's very important to take advantage of these things. But remember, always stay organized. When it comes to taxes, the key is to document everything. And I mean everything. Every time you travel, document it. By document, I mean a receipt, or some sort of log. If you're traveling, some sort of daily log of what you did on your travel. Hey, I was on the beach this day, but then the following day I was working about 4 hours a day. I was checking emails, responding to client messages, things of that nature. I was looking at some real estate overseas in Jamaica, or whatever it is. Whatever you decide to do in order to claim this as tax deduction, you should strive to do that. You can hire your kids, pay them up to $12,000 as long as they're under the age of 18. They don't have to pay a single penny in taxes, and you get the tax deduction in full of $12,000. So these are strategies. Part of the reason why I exist is because I help clients implement or come up with these strategies so that they can help essentially put some money back into your pockets. Instead of paying $12,000 or however much for daycare, why not hire the kid, pay them a salary or pay them a distribution or whatever it is, and write off the $12,000 in full so now the child is paying their own daycare because you hired them, they're working, they're cleaning your office, they're doing whatever, something that's legitimate, that's workable. It can be as simple as cleaning the office or learning more about the business. So just something to keep in mind there. So yeah, that's essentially what I would like to point out. These are some tax tips for business owners. These are some things that you can implement as a business owner, and even as an individual, somebody who's striving to become a business owner. Hopefully this motivated you to step up and become a business owner, because the world opens up. The tax world just opens up to you once you become a business owner. Everything becomes accessible to you. So if you need help with your taxes, if you need help with entity restructuring or strategizing and all that good stuff, please feel free to reach out. My business line is 773-679-7198, 773-679-7198. If you call that number, you may reach my receptionist. No problem, though. I'll respond to the call when I'm on a Facebook Live like this or on the radio. I'm not taking phone calls, so we do have a receptionist team. And in case you're curious, we're actually in Vegas. And yeah, I mean, that's pretty much. We'd be more than happy to help you. We have 25 people on the team that can assist you in some capacity. Whether it's getting your books in order, whether it's doing the taxes. And we're all in 50 states, so you don't have to be in Chicago or the whole in person. 99% of our meetings now are not in person. 99% of our work is actually now not done in person. It's all really a virtual thing nowadays. That's just the type of world we're moving in. If you think about retail, Amazon, they're all virtual. They're doing the whole virtual thing. We're doing the same thing pretty much. That's how the firm was brought about. So hopefully you guys gain some insight. So feel free to reach out to me, 773-679-7198, 773-679-7198. You can email jb@budutaxservices.com. So that's the firm email address for you to be able to reach out to us and all that good stuff. Or you can also reach support at budutaxservices.com. You can visit our website, budutaxservices.com, schedule consultations. We're locked and loaded. We've already started filing returns. I mean, we're pretty deep in the returns already, and tax season technically hasn't started yet. So thank you all for joining today. Hopefully you guys gained some insight. As a recap to those who missed or couldn't catch us, what we talked about was tax season tips for an individual. Make sure you find somebody who has integrity and somebody who's out for your best interest, can educate you and help you grow your finances and all that good stuff. And then for the business owners, key is to stay organized, and then basically know what to do, know the process. And this is where you seek the help of a tax professional to get the taxes done. Understand the write-offs. This is what a tax professional can help you do. And yeah, really just just pretty much get everything going. So with that being said, thank you all for tuning in to WJT 98.3 FM, your voice, your music, your station. My name is Chef Badu. I definitely look forward to continuously delivering you all this content. Next week we'll be back. We'll probably do another tax topic. Haven't determined a topic yet. But we're live every single Monday night, 7 to 8 p.m. Central Time, right here, live, WJT 98.3 FM, voice and music, your station. We'll start streaming on Instagram as well. I did an Instagram live a week ago, and it went pretty well. Did a nice Instagram live. Facebook is great too. But yeah, feel free to ask any questions, anything you need. Drop in my inbox, DMs, whatever. Be more than happy to help you. And today is MLK Day, Martin Luther King Day, so very thankful for this day. Decided to do a show anyway, just because I feel that people need content. This is 2020. We need to push and strive for greatness when it comes to this year. So with that being said, we'll cut it off early today. And remember, it's tax season. Make sure you find the right tax professional. So thank you all for tuning in to WJC 98.3 FM, your voice, your music, your station. My name is Chef Badu, and I look forward to continuously delivering you all some content. Thank you.
attention. You take I'm call my thing. Should we do what? You sugar my thing. I am a dead.